Well, the key thing I've been saying for years is the inordinate burden for commodities has been U.S. stock market going up, and then we'll see where commodities are going. So hopefully that's being relieved. But it looks like the U.S. stock market might continue going down, which means the normal deflation from inflation from commodities. So we're in that cycle right now. Crude oil's at $60 a barrel, most notably because it went up too high, up to 130 a couple of years ago. Now it's heading lower. Average cost of production in the U.S. is around 50. Typically has to get down to 40 to shut that off. The most significant commodity that really jumped this year was copper. It made a new high, and it's been stopped out. I say that because I was an ex-trader. I probably would have been stopped out trying to short it, and hopefully I would have kept that on finally. Now it's going back down. It's the most auto-correlated commodity. It might go down to 3. And you look at natural gas. It's the vested interest of our government for energy prices to go lower. So natural gas pumped up around 4. It's tilting lower now. I think it's more likely to go to 2, particularly because that's a vested interest of the Trump administration. It's what it always does anyhow. So if the stock market goes down, the deflationary forces from commodities will accelerate, which is where I think you get those kind of lack of inflation in the entire space.
Which is so weird because this should be good news, right? And yet it doesn't feel like it. Like the price slide feels not good versus a price slide where it's like, yay, gas prices are cheaper. Is there a difference in the kind of sell-offs that we see?
Alex, that's the perfect yeah, but because I look at it as a commodity trader, and you see it on the chat. Sometimes people get all set when like grain prices are going lower. I'm like, this is a wonderful thing. It's called superabundance. We have an excess of energy and food in this country, and they're getting cheaper. What does that really matter for? The people who vote for President Trump in the heartland, which is where I'm from, the Rust Belt. The rich people on the coast who own equities is not as important. But to me, that's the key thing that matters is all these prices are going lower. It's a normal cycle. And the question is what stops it. So the key thing we're looking forward to now is, will we get a drought this summer for grain prices to go up? And if they don't go up, they're going lower. That means lower food. So everything's tilting that way. And what, a midterm is about a little over a year over now?
Yep, absolutely right. Hey, gold finally suffering a little bit of weakness here after that strong run higher it's had. Mike, what do you make of gold here now below $3,000 per ounce?
Profit taking, backing up in a decent bull market. I mean, below 3,000 is the first kind of trigger for, I think, the responsive buyers to get back in. 2,800 is very good support. I think gold's just a decent bull market to continue higher. It did the same thing in 2008 when we had a decent rout. Managed money net positions were really long, but it's a pretty enduring bull market. Gold ETF holdings are starting to rocket up higher as people are seeing what's happening in the stock market. So I think it's a dip in a bull market. And this question, what might knock that up a little? The key thing I want to point out is versus the treasury market, like the GLD, which is the most widely traded gold ETF, versus the TLT, which is the most widely traded bond ETF, gold's very expensive versus bonds. So I think it might, if we get more deflation in the stock market, it's going to pass that baton of deflation and risk asset appreciation to the U.S. bond market. But we'll see how that one works out.